Ira Epstein with your morning flash update for this Thursday, the 26th of January, 2023, 8:20 a.m. Central Time. Remember, today's our live webinar. I will see one and all, I hope, today at 12:15. I'll open the webinar. That's Central Time, p.m. And I will start promptly at 12:30 p.m. Central Time. If you've registered, you already have your passwords. Use them to log in, and I will see you there. We have a lot of questions. It's going to be a lot of fun. Okay, so as I look at the marketplace, we had a lot of good economic data this morning. And good means the stock market's rallying off of it. We had fourth quarter GDP. It gets revised one or two times after this first look, but you'll see what that did in a second here. Let's first go over where we're at. Demand coming on, as more traders talk about China return after the lunar holiday, you get more and more bids, and every time the U.S. economy looks even remotely okay, you seem to get a bid in there. Grain market still caught in this whipsaw that you got. I think a major bottom is formed in the cotton market because recessions, when they come, if they're here, there's all these arguments. If this is as bad as the recessions are going to get, seems to me the cotton, if you look at the charts, looks pretty good in there. Look at this rally that came about in silver. Silver decided to wake up today with copper and energies. China, just think of it. That's the only thing that would make all this happen at one time. And that's what's going on. And gold being dragged higher. It's in an area, gold, where probably some selling, profit taking place, not getting bearish. Got to consolidate some of these gains. And there's been the switch from the Feb into the April gold. So you've had a buying wave take place as that has taken off too. In the dollar index, I still think the rallies get sold. I think they get bought in the euro. The British pound is acting quite strong still up here. Canadian dollar, you saw that they went on to an interest rate hike yesterday and then decided to pause. So we're not going to get rate hikes for a while. The big question is for the U.S., we seem to be behind them. Is that what we're going to do? Now, as I said, a lot of economic data. We got advanced GDP and chain-weighted numbers. The final report last quarter, third quarter, was a growth of 3.2. Now we're at 2.9. Now, you're probably looking at the top numbers. And the reason is the markets fully anticipate that as the Fed rate hikes have taken place and another one about to take place, that'll weigh on the first quarter GDP. Just keep that in the back of your mind. You can see the chain-weighted index was 3.5%, well under the final report of the prior quarter. As we come down to core PCE, 3.9, that's down from 4.7. So there's hope here. And that's what people are watching. There'll be revisionments, but they're looking at the numbers having worked in the Fed's favor. Advanced durable goods, well, they were up 5.6%. I think that's what it is. They expected it up 2.5%. So people are out there buying. Ex-transportation, they were down 1/10 compared to the prior up 1/10, and they expected them down 2/10. So not as bad as they thought. The Chicago Federal Reserve National Activity Index, improvement. Still not a positive, but improvement. It's a negative 49. Jobless claims, come on here. They're down 6,000. They were looking for a gain of 15. So the jobs market is so darn strong that it is saying, hey, bring on your best. I'm going to be able to work with it. And what we'll be able to do is absorb people you let go, just like what we're seeing, be it IBM today saying, and other companies all the way through. So what? When you take a look at the Kansas City Fed, their January manufacturing composite and business indexes come out at 10 a.m. Central Time. So as you can see, we have had a heck of a run here in these markets in data, and I told you today was going to be full of it. It kicked up the stock market. It certainly didn't help silver and gold. I think that's more of a Chinese acronym going on. In the dollar index and the euro, I could see some profit taking, but not a trend change take place out of that. I discuss that with you first thing every morning. I hope you realize that. We cover right away 40 some odd charts with specific buy and sell. Now here's the difference. You get from your broker, oh, John, let's buy this, or Mary, let's sell this, let's do whatever. But they're not showing you the charts, the reasons why, the risk factor, and letting you make a decision based on that. Most people just say, I think the market's a buy or a sell here, and here's what I would be doing, blah, blah, blah. Yesterday, I had a good amount of time where I was working with some of my clients, and they had questions on specific charts that they were trying to write calls on, do other things. What did I do? I created, and I do this for my paid subscribers. I can take out a minute or two, and I do it. I create a chart, show them what it is. I'm talking right into it, and I send it to them. It's better than me writing an answer. They got it, and I know they appreciate that. So how do you get involved in all this? It's simple. You can go to our website under the word research. Everything's explained. Join our team. The second part is you can call and ask questions. My staff's there right now. They'll talk to you. And at the very top of this, I always put up an icon. If you want to find out more, just move your cursor up there. It'll link you right into the area. I'm Ira Epstein. I'll see you all, I hope, at 12:15 p.m. You can log in, and at 12:30, I'll be talking to you. That's p.m. Central Time in the live webinar. Take care.